Welcome back to the second half of the Future Show, ladies and gentlemen. We're just 60 minutes away from the cash open for stocks on Wall Street. We just had some economic data that came in better than expected, sticking with the trend that we've been seeing. Durable goods orders topping expectations. Last month's numbers got revised higher. Let's bring in Alan Nuckman. He's the Chief Market Strategist at Agora Financial. He's joining us to help us take a look at the numbers. Alan, we've been seeing big numbers in housing. We've been seeing big, well, for the most part, jobs number. We had the weekly claims that raised a little bit of concern, but across the board, for the most part, numbers here in the U.S. have been beating. This number feeds right into that narrative. Durable goods orders coming in at 11.2%, topping estimates for 4.3. Last month's got revised up to 7.7. Core durable goods, Alan, to 2.4%, topping estimates for 2%. Last month's got revised from 3.6 up to 4%. I mean, these are strong numbers across the board.
Right.
You'd expect to see treasuries into lows and continuing to see some of the weakness we've been seeing.
We'll have to see. We saw bouncy here in treasuries, and it's kind of held a little bit after, I would say the soft bottom. But I've moved, as you can see, and you need durable goods when you move. And you're seeing, housing starting to pick up, and I told you my whole patio is filled with packages. So, I got tables, I got chairs, I got carpets, I got everything. So I can understand where that number's coming from. But let's remember how low the bottom base was that we bounced back from. But momentum is a powerful force. We see the market, we see the S&P and the NASDAQ making new highs here almost every day. So the overall macro market is just is continuing. And I loved your last guest. I could listen to that all day long. That's speaking you and my language for sure. And he said there's no reason that it can't continue. The markets can do whatever they want, and those that have been trying to figure out when this is going to end have had a disastrous end for themselves. Yeah, the market has been doing what it wants. The bulls have been generously rewarded for risk on that side, and those that have been looking to get long. The dollar kind of limited reaction to this. The indices kind of limited reaction to this. Alan, you mentioned that you've been spending. We've all been spending for the most part, and those who have been buying homes have been buying large ticket items. We see that clearly. Durable goods orders again up 11%, 11.2%. I guess the real concern would have been here if this number had missed. Then it would have been kind of like the ends just sort of weren't tying together, and there was a little bit of a gap between the fundamentals and what we should be seeing in some areas versus what we are seeing in other areas. I mean, this is a good thing, again, in many different ways. And in theory, this could help sort of add to some of that boost to sentiment and not only investor but consumer sentiment as well. Right. And psychology. Psychology is, I think, important. But let's get back to the dollar, because that's what everybody's waiting to see what the next move in the dollar is. We're between 92 and 94 for almost a month now. Now, your last guest talked about bullish divergence. He was looking at it with the RSI. I look at bullish divergence by using implied volatility. Implied volatility is a measure of excitement, let's say politely, of the traders. Now, when the dollar made new lows at 92, we did not make new highs in implied volatility. So that was my signal that we might get a little bit of a stall in the dollar, and that's what we've seen so far. So let's see, to go back to one of your phrases that you taught me as a kid, the test and reject. We need to test that 92 and either break it or reject it to see where the next leg is, and that'll have a big determination on everybody else. Obviously, as we'll see, maybe gold will come back. We'll see stocks, continue to rally run with a weaker dollar. And let me throw out at the end here, keep your eye on crude oil. Crude oil's up here about the 43 level, hitting that 43.50. It's been coiling and consolidating for so long, it looks like it has to do something. Now, if you look at USO has been ridiculously in an amazing tight range, kind of like UNG was, but UNG broke out a couple weeks ago. So, let's keep an eye on this. These are some opportunities that may come out here soon.
I'm glad you brought crude into discussion, because we were talking about that earlier in the show as well, certainly tied to some of the dollar price activity we've seen, or at least the weakness there didn't hurt crude in terms of its move off the lows we saw earlier this spring, April, May. But you also mentioned a shift in sentiment, and I wanted to kind of tie this back to the dollar discussion, because this shift we've also seen not only in terms of sentiment, but also in terms of some of the economic data here. It seems like better in the U.S. over the last couple of weeks, a little bit weaker in Europe recently. And, we had been watching that dollar weaken as it seemed like we had lost some of that kind of leading higher in terms of some of the economic data. Europe started to kind of grab a hold and was doing a little bit better than the U.S. right now, but that's starting to shift a little bit here as well. Now, as that shift took place, the dollar lost some of the momentum to the downside. I mean, these better than expected economic data points ultimately are going to support the dollar and kind of feed into that, well, at least not lower rates, and it kind of moves us away from potentially some of that yield curve control discussion that we've been hearing, but ultimately this feeds right back into sort of expectations for tomorrow and Fed Chair Jerome Powell. But I mean, the economic data is really at the epicenter of all of this in many ways.
But there's a but here. The but is there's a larger overriding principle, political principle of driving the dollar down and keeping rates low.
Yeah.
So they're going to do everything they can to stimulate. And that's their biggest lever that they have right now. So I don't see that changing anytime soon.
Noted.
To try and predict that is difficult. Now let's get into Mr. Powell. Mr. Powell is going to come out and say, well, I don't know exactly what he's going to say, but most likely the idea is that he's going to lift those inflation constraints, and the policy has already changed in the last couple of years, where they want to see inflation above 2%, and they're going to let it go if everything else is okay. But I think they're going to come out and say it publicly. So nothing's actually changed except for the public-facing message, and so that could be helpful for the dollar decline. Could be helpful for gold as well. So let's see how the market reacts to that. But it shouldn't be any surprise. Anybody that's listened to anything they've been saying and doing over the last 2 years knows what the game is.
Yeah, the game being they've been trying to, well, not necessarily the Fed, but certainly the Trump administration's been talking down the dollar. Fed's been trying to find inflation under any rock they can and haven't been able to. And obviously some of the stimulus activity is expected to bring about some. Alan, do you think that if the Fed starts talking inflation, it'll be interpreted as, hey, maybe they know something, maybe they see something coming down the pipe that we haven't? I mean, inflation has inched up, but not necessarily the concerning levels at this point. But you know how it goes. Once they start talking about it, all of a sudden, spidey senses start tingling, so to say.
Right. Well, I know that the last time we talked, I mentioned the big zero. I mean, we're so close to zero. It's not 1970. We're not seeing a price, a loaf of bread doubling in a week. Right. I mean, gas prices aren't, a huge percentage of our economy at this point. And so, we're coming off of zero. So no, I don't think it's going to spook anybody that's looking at it big picture. They'll have to mention, but they want inflation. Yeah. And let's just mention one thing. As I've loaded up on all my durable goods, where did I get them all? Internet.com. Yeah. With the internet, it's lowered the inflation because everybody has to compete on prices. So there's one thing that's changed everything. So I don't see inflation, being a problem. Again, I grew up in the early 70s, so I was there sitting in the back of a station wagon, I'm sure, waiting in gas lines, but I don't see that happening anytime soon.
Yeah, certainly a new norm in many ways, and that's what we're seeing in terms of reflection thereof. I mean, look at the indices and the new all-time highs relative to some of the fundamentals that we're seeing. Many say it doesn't add up, but you can find reasons for why. And certainly, Alan, we appreciate you joining us to help us do that. Alan Nuckman, ladies and gentlemen, helping us answer some of the questions that we have and helping us take a look at the economic data and what it means in terms of markets and recent price activity. Alan Nuckman, thanks again. Alan's the Chief Market Strategist at Agora Financial, and always a pleasure. Ladies and gentlemen,